So we already know what's happening in Canada, right, with regards to the real estate market. And right now it is scraping along the bottom. Okay. We've seen the listing that don't move. We've seen the open houses with no offer. So the question isn't what's happening. We already know that. The question is, why are we still stuck here? And most importantly, how does this going to end? So let's talk about that. According to BMO, they put it bluntly that sales won't recover until prices come down either voluntarily or by force. So we got sellers who are anchored to 2022 peak valuations, okay? And the buyers calculating affordability with today's interest rates, okay? That's a recipe for gridlock, and that's exactly what's happening in Canada. What is the twist here? The twist here is, even as borrowing costs have eased from the peak, the gap between what sellers are asking, which is way up higher here, and then what the buyers can pay hasn't closed yet. So that gap is much wider now. And that's why the volume remains frozen. Okay. So let's talk about the RBC. So RBC published a report today saying we are in an early recovery phase. Okay. Which means transactions are ticking up in some markets, but compared to historic averages, we're still miles below the normal activity. In the hot areas like Toronto and Vancouver, the inventory is climbing faster than sales, right? Prices are dropping, but they are not deep enough to lure back the sideline buyers in droves. So what RBC calls a recovery, I call a slow bleed phase. A market that's moving, but barely, only just enough to keep both sides guessing. Now, there are three real paths forward. Okay, number one, voluntarily price cuts. So seller adjusts the market activity. Number two is forced price cuts, which means job losses, higher carrying costs, or credit tightening, or anything that is pushing the sellers to actually cut prices and push inventory into the market. The third one is stagnation, which means the prices drift sideways for years while inflation quietly erodes the real value. Because when we look at the average house price, most of the time it is quoted as nominal price. It is not adjusted for inflation. But if you drag that market over a number of years where the inflation is still climbing up above 2%, when you compound that, you realize how much purchasing power you're losing in real terms. So historically, if you look at it, Canada hasn't tolerated long stagnation. Okay, so government will definitely intervene to kind of move the needle, which means the number three scenario that I just mentioned, stagnation, it is less likely. But I think the first and two, which is voluntarily price cuts or forced price cut, may be at play here. Now, this isn't just about real estate, okay? It's about where your capital works hardest. In my channel, I covered typical, how to invest, how to protect your purchasing power, whether this is in real estate or in any other asset classes. While the real estate in Canada is dragging its feet, I would definitely move my capital into some other asset classes, right? So if you're waiting for the right entry point in property market, use this time to grow your liquidity and invest smartly elsewhere. Personally, I would like to have my capital working in markets where I can be flexible and liquid, which means stocks, ETFs, even short-term trades, Bitcoin, the major coins in the crypto industry, not everything, but definitely Bitcoin, Ethereum, Solana. These are the major coins that has a lot of liquidity going into those tokens. And here's a tool that you can help. Okay, Webull, right now they're offering $50 free credit bonus, signing up bonus to my followers, and they're also matching 2% deposit. So it's a free offer for you guys. It's a great way to stay active and ready for the right opportunity. But that's in real estate. You can buy REITs as well through this platform, or you can buy stocks, ETFs as well. The link in the description below, check it out. So Canadian housing market, it doesn't break overnight. It grinds, it wears people down, and then suddenly it shifts. So I think we are kind of slowly moving down, and maybe we are trying to settle here. The winners will be those who prepared in the quiet phase. So what's your call? Do we see sellers blink first, or are we headed down for a drawn-out standoff? Drop your thoughts in the comment section. I want to hear where you stand. If you want more insider takes on markets, hit the like button, subscribe to the channel, and let's ride this cycle together. So let me know what you think about that. If you like this video, definitely give me a subscribe and a like button, and I'll see you in my next video. Take care.
Sorry for the interruption, guys. Just wanted to let you know that I also offer one-on-one consulting calls to the individuals who are looking to discuss their financial planning, their investment strategies, their kids' education planning, their immigration moves, as well as the young professionals, because I have been in the tech industry for almost 20 years. So I also offer one-on-one consulting calls to the young professionals who are looking to have their career development discussion with me, and also personal branding as well. So if you are looking to have some sort of an expert opinion, there is a calendar link in the description below. Book a 30 minutes call with me and I will be more than happy to help you out.